You've heard the term, but you don't really understand what it is or how it works. In this post, we're going to break down what a stock is and how it works. We're also going to cover some of the different types of stocks and how to invest in them. By the end of this post, you will have a better understanding of what stocks are and how they work, which will help you make better decisions when it comes to investing in them. So read on and learn everything you need to know about stocks. 1. What is a stock? A stock is a piece of ownership in a company. When you buy a stock, you are essentially investing in that company. You may be able to sell your stock at any time, but you will likely make a profit if you do so. When you buy a stock, you are also likely buying the right to receive dividends, which is a payment made by the company to its shareholders. 2. The benefits of owning stocks. Owning stocks also gives you the opportunity to make money if the company's shares go up in value. For example, if you own 1,000 shares of ABC Company and ABC's share price goes up 10% from $10 to $11 per share, your 1,100 shares are now worth $1,120. If ABC's share price goes down, you'll lose money since your shares are worth less than $1,100. There are a few other benefits to owning stocks, such as being able to vote for the board of directors and having the ability to sell your shares at any time. 3. The risks of owning stocks. When you buy a stock, you are also lending the company money. The company can use the money to pay its bills, make new investments, or use the money to pay off debts. When you sell a stock, you are giving the company the money that you originally borrowed. This means that you are taking on some of the risk that the company is taking. There are 3 types of risk when it comes to stocks. 1. Financial risk. This is the risk that the company will not be able to pay back the money that you lent it. 2. Market risk. This is the risk that the stock price will go down. 3. Operational risk. This is the risk that the company will not be able to run its business properly. 4. How to buy stocks. A stock is an ownership stake in a company and is a tradable good. Owning stocks gives you the right to receive dividends, vote on company decisions, and receive rights to sell shares at a future date. There are a few ways to buy stocks. You can buy them directly from a company or through a brokerage. Buying stocks through a brokerage will often give you access to more stocks and options than buying them directly. When you buy stocks, you are also buying a share of the company. The company may be doing well and the share price may be high, but if the company goes bankrupt, the share price will fall and you will lose your investment. 5. How to sell stocks. A stock is a certificate of ownership in a company. When you buy a stock, you are buying a piece of that company. You are also investing in the company, because your hope is that the company will do well and the value of your stock will increase. When you sell a stock, you are giving up your right to ownership of that stock. You are also giving up your investment in the company, because you hope that the company will do well and the value of your stock will increase. If you want to learn more about stocks, you can read about them in a book, or you can visit a website that offers more in-depth information. 6. The importance of stock market analysis. A stock is a security that represents an ownership interest in a company. The stock is bought and sold on the open market and its price is determined by supply and demand. The supply is the number of shares available and the demand is the number of shares that are wanted. When the demand for a stock exceeds the supply, the price of the stock goes up. Conversely, when the demand for a stock exceeds the supply, the price of the stock goes down. 7. The importance of stock market news. Stock market news is important for a few reasons. First, it's a way for investors to get an idea of what is happening in the world of business. Second, it's a way for businesses to get an idea of what is happening with the economy. Third, it's a way for businesses to get an idea of what is happening with the stock prices of their companies. Fourth, it's a way for businesses to get an idea of what is happening with the stock prices of their competitors. Fifth, it's a way for businesses to get an idea of what is happening with the stock prices of their own stock. Sixth, it's a way for businesses to get an idea of what is happening with the stock prices of their assets. Seventh, it's a way for businesses to get an idea of what is happening with the stock prices of their liabilities. Eighth, it's a way for businesses to get an idea of what is happening with the stock prices of their investments. Ninth, it's a way for businesses to get an idea of what is happening with the stock prices of their customers. 10th, it's a way for businesses to get an idea of what is happening with the stock prices of their employees. 8. The stock market today. A company can issue new stock, which means that the number of shares outstanding increases. If the company is doing well, the share price will increase, and if the company is doing poorly, the share price will decrease. When a company issues new stock, the number of shares outstanding will increase, and the price of the new stock will be lower than the price of the old stock. The new stock is said to be issued at a discount. A company can also issue stock with no change in the number of shares outstanding. This is called a cash dividend. The company pays out cash to shareholders, and the share price does not change. 9. The stock market tomorrow. When stocks are bought, the buyer pays the seller and receives the stock. When stocks are sold, the seller gives the stock to the buyer and receives the money. 10. The stock market for beginners. When you buy a stock, you are not buying the company's future. You are buying a piece of the company's past. The future of the company is up to the people who work there and the decisions they make. When you buy a stock, you are not buying the company's future. You are buying a piece of the company's past. The future of the company is up to the people who work there and the decisions they make. A stock is a type of security that gives you the right to share in the profits of a company. When you buy a stock, you are investing in the company and are hoping that it will go up in value. When you sell a stock, you are taking your investment back and are hoping to make a profit.